Hello again, today is September 25th, 2020, and this is a market recap. As always, please hit the like button, subscribe to this channel, and share this video with others. Your support is what keeps this channel going, so thank you. We'll look if stocks have bottomed. It's possible. We'll look at the support for the S&P 500. What is stronger for you, fear of losing or fear of losing out? So we'll look if Nasdaq right now versus April 2020. What is the risk? But transportation stocks are actually in very good shape, and one just stand out is Fedex with 71% gain recently. So congratulations to subscribers. How to sell short? So a lot of questions about it. I'm gonna try and answer it, and it's like super easy. So I'm gonna try and explain it. Good couple of examples: energy ETF and Exxonmobil. Very simple, straightforward. Dollar, I think, is overdue for a correction, so we'll look at this. This is going to be on a 4-hour chart, so then we'll look at gold, silver, and we'll also look at trading forex on 4-hour charts and on daily charts, and some really beautiful breakouts there. And Ethereum, I bought some Ethereum. Before I forget. Okay, so as always, I'm using my own indicators, these green, blue, red, and yellow lines. Find out more about them at MasterCharts Trading. You can also go to everyonecantrade.com. That's everyonecantrade.com. Easy to find. The support and resistance basically is what I'm looking for. So these lines are not, drawn in by hand. They are mathematically calculated. You can see there, you can turn them on and turn them off. These indicators, the price action indicators, the MasterCharts Trading price action indicators are available for tradingview.com. Simply go to MasterCharts Trading. Also, everyone can trade and sign up. Everyonecantrade.com. Okay, so what do these lines mean? We're looking for either a breakout, such as occurred here in April 29, or a pullback. So currently, the stocks are in the middle of a pullback. So they're exactly between the two lines. What do these lines even mean? Like, why would I care? So the way I use them is simply to mark good levels where the risk and also the opportunity is just well balanced. Based on backtesting, based on actually I made about almost close to 500 trades since 2016. So using these indicators, and I have a very good success rate and profit factor of about 3.0. So I make about $3 for each dollar I lose. So in other words, I have tested these indicators many times. We also have a robot that has been trading on this as well. So robot is a little bit still, in the works, but we will get there eventually. For now, I'm just trying to explain that these lines are not just randomly drawn in there. They actually kind of make sense, and they're used for, in my opinion, to look for good opportunities, basically. So the good opportunity for S&P 500 would be at around 3,057. Right now, it's just kind of like in between, and between the green and the blue line, but also the all-time highs. So the dominant feature of this chart, I think, is the all-time highs. In other words, unequivocally in a bull market. If or when we get to 2410, currently, the yellow line there, that would be the beginning of a bear market. So you can see that's a significant way down. So let's not really worry about it more, but let's worry about where we're going to be buying it. And right this instant, I just don't really care about this particular chart. There are so many other opportunities, and I'm actually trading a lot of more volatile stocks right now. So I'll show you maybe next time some of the trades I've been doing. But on this chart, I'm just going to be waiting, basically. that's not really a good opportunity for me personally. A great opportunity would be around the blue line. So we need to see a little bit more of a pullback, I think. So right now we're at 32.90. Around 7% down would be an excellent opportunity for me. So that's another 230 points. Okay, so let's look at QQQ. Here's NASDAQ. This is NASDAQ. And on this chart, I want to try to highlight the risk. So what is risk and how do we define risk? The normal definition of risk in trading, and the way I normally think about risk, is how much am I going to lose? So back here in April, you can see back in where I'm hovering, 14th of April 2020, that's the breakout. So at that point we started buying NASDAQ. At that point my risk was only 15%. You can see that it was from the blue line to the yellow line. So this was my risk. Now as the NASDAQ is approaching that good buying opportunity at 251, and that's again the blue line, the risk is much greater. You can see the risk is 25%. So what happened here? So we can see that the range, you can see between the green and the yellow line, was much narrower back in April, May, while right now it's much wider. So the risk right now would be greater, but also since we have all-time highs, the risk of missing out is also quite great. And actually it's even greater right now because it could easily just bottom and go to new records. So this is the important thing, is how do you personally as a trader balance this risk? Do you try to, I mean, you should be trying to avoid losses, obviously. You should be absolutely not tolerating large losses. Small losses are okay. I lose money. Everybody loses money. That's normal. Like I said, I usually lose $1 for each $3 I make. So that's very important for each trader. So how do you define the risk? One thing is, of course, how much are you willing to lose if the nerves don't give out on top of your predetermined stop. So here back in April, you would have predicted that you will be okay losing this much money, 15% of your position. But if for some reason your nerves give out and it collapsed even lower and you're like, oh, I don't want to exit now, so that means your risk just got bigger and your loss just got bigger. So this is again one of those things that we decide for each person. So me personally, I like more of breakout trades, and I specifically like this type of trades where the trading range is quite narrow, so my distance to my stop is actually quite low. The upcoming potential NASDAQ trade will be more risky than a previous potential trade back in April, in my opinion. So having said all of that, you can see that transportation sector is actually doing quite well. So you can see the relative selling for transportation was significantly lower than relative selling for technology. So you can see that selling here was like 6%, but for NASDAQ, the selling from the records here was like 15%. And I think it's also has to do with just underlying, I guess, fundamentals. I mean, this is showing good, strong fundamentals. There's demand for delivery services. When there's demand for delivery services, it means people are actually using the stuff, being delivered to them. And additionally, they have money to pay for those things that are being delivered to them. So yes, there was significant selling, and yes, we could continue lower, but overall, I think fundamentally this is a sound setup. Transportation is close to records. S&P made records. Utilities didn't make records. So if we subscribe to the Dow theory, then how important are utilities? Some say they're quite important. I think transportation is more important. So I would look to transportation to make more of an impact on the economy. Within the transportation sector, you can see Fedex. So Fedex actually went to record this, if I'm not mistaken, or no, it's not. Okay, so still 52-week highs. So we traded Fedex. Alert was sent. So this is a breakout trade. This is exactly what I'm trying to explain. So you can see that the trading range was quite narrow. The distance between the green and the yellow lines was really narrow here, versus, for example, just a few months ago where the range was quite wide. So that just helps us. We don't need to risk, as much percentage of our position. So here's that actual. This is an actual alert sent to my subscribers. 8th of June here, nice 71% gain. So you can see it just shot straight up, basically. It took a while, of course. You can see it from June till September, almost October. But as I keep saying, longer term holds usually turn out more profitable. So overall, this is just showing me that transportation is strong, and I think that this pullback is an opportunity rather than a turnaround into a downtrend. Okay, so there were multiple questions about shorting stocks, and here's I think a great example. Now, I don't personally like to short stocks during a general stock market bull market, because right now S&P is in an uptrend and there's no doubt about it. But if you are really, really interested in shorting, so here's one way of doing it. So find a sector, at the very least a sector that's going down. So this is XLE, energy. And how do I know it's not going up? I know it's not going up because it hasn't closed above my blue line. Okay, so the only way for me to say, okay, now we're definitely in an uptrend is for it to close above the blue line. And it hasn't done so. So back here in April, I'm like, okay, so this is definitely not an uptrend sector. And within that sector, is there some stock that is also in a downtrend? Okay, so within that sector, Exxonmobil is also in a downtrend. And again, how do I know it's not in an uptrend? Because it hasn't closed above the blue line. So how do we short? We have both of us. We have energy ETF, XLE, the sector itself, in a downtrend. And XOM is not an uptrend either. So we need to look for down opportunities to short it. So the opportunity is like this. It's very simple. The stock is right now, back in April, trading below the red line. And then all of a sudden, on the 3rd of June of this year, stock traded above the red line. For us, that's just a setup. We need to see a signal. So we wait and do nothing. And then there's the signal. The signal appeared on 11th of June. The signal was simply a close below the red line. Again, find out about these indicators at MasterChartsTrading.com or everyonecantrade.com. So you wait a little bit, and then you basically are at the target already here in July rather. And then you can see the stock continued lower. So you have a nice profit there already. So right now it's at new lows, 52-week lows, and that's a 26% gain. And as you can see, it's visually very simple in the eye, and it's actually very easy. You don't really need to think at all. All you need to do is just look at the lines. If the lines show you to go ahead and sell, for example, here on the 11th of June, then you can buy puts, or you can actually short, or there are for XLE, there are actually inverse ETFs if you have no access to puts or shorts. So if that makes sense, let me know. Make a comment below. If it doesn't make sense, let me know too. Okay, so junk bonds, briefly, I forgot to mention them on the other chart, or an introduction, but junk bonds, as I said before, I have a position in my retirement portfolios. I sold half of the position. I'm probably going to end up closing the rest. I don't want to have a losing position on my on my hand. So right now we're seeing the general pullback for the junk bonds. Junk bonds correlate highly with the stock market. So in other words, if the junk bonds continue to pull back, stock market will probably do the same thing. Treasuries, on the other hand, are I think about to pop higher, and I went ahead and I actually bought some treasuries here at 163.23. That's TLT. So I'm holding treasuries long. I want it to go up. Okay, switching gears, Dxy Dollar Index. So currently, looking at daily charts of Dxy Dollar Index, resistance was overcome. This is a weak resistance at the yellow line. The strong resistance is at the red line at 95.96. So right this very instant, it seems like I'm going to go to 4-hour charts. I'm going to just show you what it looks like on the 4-hour charts. And it looks very cool. So if you trade Forex, you will realize that it is a breakout right there. And this is just a very easy way to trade pretty much any security, but you can, yes indeed, trade continuous securities such as dollar index or euro versus US dollar, whatever, Forex symbols on the intraday charts. In other words, like 4 hour, 2 hours, 5 minutes, etc. I personally don't like to go below like 2 hours. Ideally 4 hours or higher, but here's 4 hours, and it just looks really cool, right? There's the breakout, and then you just buy the breakout and ride it higher. Right this instant, you can see that I think we're overextended. I think we're going to see maybe a little bit higher, but not much. But the pullback, I think, should unfold, and that's about 1% down. Another kind of right, and then as a result, we can see the dollar might move down. Gold is close, super close to the support level here. Support is at 1839. It sure as heck feels like it's gonna touch it at the very least. But if the dollar rallies, it might not. So, but it's very close to the decent buying opportunity, I think. Okay, and here's euro versus US dollar. Again, I'm going to show it on the 4-hour charts because I think it's a very cool breakout. If you trade Forex, you know what I'm talking about. There's the breakdown, and I would have shorted it right there on September 22nd. So that's a very nice move, 139 pips on a 4-hour chart. So yes, you can use my indicators to trade. What it's showing is basically euro is a bit oversold, and I think we're going to see a move higher towards about 178 probably, and then we'll see, because that's also you can see a resistance there, green line resistance. Find out more at everyonecantrade.com or MasterChartsTrading.com. Alright, another really brief Usdchf. I'm going to just show you this really cool breakout, in my opinion, one of my favorite type of setups, when the indicators just see how close they are together. The risk is tiny. This is my risk right there, 60 pips. If for example the price came up to the indicator, to the blue line here on September 10th, my risk would have been 115 pips. So you can see that there's a significant difference. So when the indicator lines narrow like this, we can buy, and it's just much easier. There's a very nice gain for you. So that's about 142 pips for this trade. So yeah, you can totally do it. Just look for really, narrow trading ranges. And finally, Ethereum. So I went ahead and bought Ethereum just today at 344.84. So let's see what happens. It looks like to very right on the support line, and we'll hopefully go to new records. All right, so head over to everyonecantrade.com or MasterChartsTrading.com, click on products, sign up for one of the products. We have 3 different levels: newsletter, trading indicators, that I just showed, these lines on the chart. They are available for TradingView, and we have the Ultimate package. Now, the Ultimate package now includes the stock screener. This is a new product, and it's included in your Ultimate package subscription at only $49.95 per month with a 30-day trial. Don't forget that. And this actually scans the universe of stocks for opportunities. So, for example, opportunities such as Fedex. This would have been caught on the scanner. And again, look at this nice, tight trading range, very close together, not a big risk entry. So this is also another part of the product. I'm sending daily alerts about common stocks, common ETFs, small cap stocks, cryptos, gold, forex, on daily charts. So I don't normally trade intraday, but you can use my indicators to trade continuous instruments such as forex, cryptos, etc. on the intraday charts. I usually trade on daily charts, so my trades usually last, a few days for a few weeks, sometimes a few months. All right, again, sign up at MasterCharts Trading. Also, everyone can trade.com, and I will get you from there. Thanks for watching, and have another great trading week. Bye-bye.